Welcome, everyone, to this edition of The Business Behind the Success. Today, we have with us David Jennings, who is the founder and president of the Eagles Mortgage Company and Vision Escrow Group. Hey, David, how's it going?
I'm good, sir. Everything's excellent.
Well, thank you for joining us.
It's my
It's a
pleasure.
pleasure to have you. I'm definitely looking forward to all the information you're going to share.
It's my
Um,
pleasure.
I know that you have an interesting background because before you got into the lending business and owning a mortgage company, you were a teacher.
That is
Right.
correct. That is
And
that's correct.
you went to UCR. Would you mind walking us through that background?
Yeah. Background pretty much is I was raised in the high desert on a farm with horses, cows, goats, sheep. We even had an owl that we had to nurse back together one couple months. Um, Graduated from high school at about 17, and I did go to UC Riverside. I went in on what was called Project Transition. That was when back in the days where um, they were trying to get minorities into the UC system. So I went into that program, um, majored in. I wanted to be a doctor, but when I saw blood, it made me a little queasy. So I realized I needed to back off that desire. I had the doctor's handwriting, I had the doctor's ego, but I didn't have the stomach for it. So I decided that I switched my major to just general science. Graduated from UC Riverside in 1998, but I actually started in real estate back in 1994. My sister she was managing a boiler room back in New York City, so I was telemarketing for her. So I was one of her little telemarketers. I was that guy calling you up on the phone. Hey, this is David Jennings with Prestige Financial. Only interested in refinancing. Click. No. So I took rejection well. In being in finance, you deal with a lot of rejection. But for the most part, if you're knowledgeable, you have experience, and whoever's on the other side of the line or other side of the table is interested in your information, as long as you're confident, you understand what you're talking about, most people are receptive to that. So I was like 18, 19 years old. That was my way to help pay for college. So I was just a telemarketer making some money, working for a mortgage company in Upland. Um, I was the guy getting leads for the brokers. So I was pretty much their minion, just sucking in all the information. Um, Coincidentally, the owners of that mortgage company were two older black brothers. I was 18, 19 years old, so I was impressionable. So I really looked up to those two guys. I was pretty much their little protege. So telemarketed, and they would give me like $500 per lead.
Nice.
And I was 18, 19 years old. So I would get about six leads a month for them, and that was about $3,000. So that was,
Pretty good. Yeah.
I thought I was doing pretty good in college. Um, but I was doing all the work, talking to the clients, meeting with the clients. Um, and then when those checks came, the checks were about 7 to 8 grand, sometimes 10 grand, and they would just hand me over $500. So I was like, the guy's name is Ken. We're still friends to this day. Awesome men. Excellent examples for me. So they pretty much were my introduction into real estate, finance, mortgages, lending. Um, so I used to ask them, "Hey, you guys are paying me $500 per lead. How can I make more money? I see these checks coming in." They're like, "Well, David, you need to get your real estate license." So I was probably in my second or third year of college, and in order to get your real estate license, you either needed to you had to take a class, um, and then pass a test, and you were able to get your real estate license after that. So that's what I did, still while I was in college. This was 96, 97-ish. Um, once once I got my real estate license, still doing the same thing, telemarketing, and then they were giving me 50% of what I would make, but I still was doing all the work. So I'm like, okay, I'm doing all the work. These checks, and when I say the checks are like 7 to 10 grand, they're legitimately sometimes they're even more, and they're just cutting me in half, half, give me half. But they were putting me through the fire. They were preparing me for what would become my future. So I kind of got tired of seeing those big checks get split in half. So I'm like, well, what do I need to do to make more money? I mean, you guys are, I'm doing all the work and you're cutting it in half. They're like, well, David, you're going to have to become a broker. So in order to become a broker, you needed to have either a bachelor's degree at the time or
Mhm.
5 years in the business. And I had only had my real estate license 2 years at the time. So I graduated in 1998, and the market was changing at that time. I did get my broker's license. Um, and these brothers were so honest. They were so genuine. They were such good mentors that they actually gave me all the lenders that I work with. They gave me the intel. They gave me the inside contact. Like, approve this guy. Let him do loans through you. So once I got my broker's license, I actually opened up my own mortgage company in Diamond Bar. I was 22 years old.
Wow.
Now, I learned a valuable lesson. A lot of times we are enthusiastic about jumping ahead. I want to be the boss. I want to be the man. I want to make 100% of the money. Why am I giving you half? Why am I getting only getting $500?
Right.
Um, Make a long story short, that business went down in flames, like bad flames, because I was a good telemarketer, but I didn't
Mhm.
know anything about running a business. I didn't know anything about phone systems, computers, insurance, offices, rent, employees. I'm sick. I can't come in. I didn't know anything about running a company. All I knew was how to talk to clients about loans. I was a loan officer at that point. So at that time, I had to make a quick pivot, and and since I wasn't successful as a broker, I didn't give up. I just pivoted. So since I had started out biomed, I decided I had enough science classes to teach science. So I
Mhm.
actually got my emergency teaching credential. I went to Lock High, of all places. I don't know if you guys are familiar with Lock High, but I was a
Familiar.
young black man. So I'm like, you know what? I want to go to the inner city and show them that even we can be scientists, teachers, chemistry, biology, just upstanding citizens at the end of the day. The
Right.
principal of High wasn't having it. I forget her name, but she looked me up and down and was like, "Nah, these kids will eat you alive." And I was disappointed because that was a perfect opportunity. I think that was a mistake on her part. Um,
Absolutely.
and make a long story short, everything happens for a reason. So Westchester High School is an aerospace magnet. It's right off of Manchester in LA. So I
Mhm.
went over there and I taught chemistry in their aerospace magnet at 22 years old, and that was a
Nice.
good look. That was a good look for me. It was predominantly black school. The Clippers, the basketball teams off the chains. They funnel a lot of their players. Lou Wright or Lorenzo Wright was playing for the Clippers at the time, so his younger brother Lou Wright was there. So I was playing basketball at the time, so I was able to relate with the kids, number one, and I was able to teach, and it was an awesome school. So I taught high school chemistry from 98 to 2003. And best 5 years of my life. And teaching taught me everything that I needed for the most part to run a company. And that I was ready because kids, 15 to 17-year olds or adults, should I say, are nothing more than sophisticated kids.
Right.
Teaching taught me classroom management, how to manage people, um, expectations, how to manage expectations, and I was able to take that trial by fire and parlay that into what has now become my mortgage career. So teaching was amazing. It was amazing. It was
Nice.
amazing. It was amazing for me.
So what was the light bulb moment that where you decided that you were going to retire from the teaching industry and you were going to just go full on into the owning your own mortgage company? You know, what helped you decide that you wanted to do that?
That's an excellent question. I never gave up loans in real estate, so it was always my little part-time job. So I had a contract processor. I worked out of my house, so I would teach. A lot of real estate is done in the afternoon. It's after 3, 4. That's when people get off. That's when most people can see homes or on the weekends.
Right.
So I used loans in real estate or finance in real estate to get me the little extras I needed in life. So I wasn't too successful doing it, but I was successful enough to probably make an extra 20 or 30 thousand dollars a year.
Mhm.
Um, so what changed my life was in 2003. I had moved from Westchester to Downey to Warren High School. So I was contacted by a place called eLoan Sites. They were a marketing firm, and they had a system that it was a computer, and it had 8 phone lines put into it. So the goal was to put it in your house, because before cell phones, most people had landlines. And if you
Right.
called from your house, you could have unlimited calls from your house, and you didn't have to pay for it. So this system, all it did every day, all day, was pick up fax numbers. So that system cost 20 grand. Now, as a
Wow.
teacher, I'm not making 20 grand where I could just buy a system for 20 grand, but I did have a UC Riverside alumni credit card that had a $20,000 limit. So I had, I've always been the type of person that I swing for the fences, but I do it in a calculated fashion.
Mhm.
So it took everything I had to hand over that credit card to this
I'm
place called
sure.
eLoan Sites, um, to buy the system. So we put the system in my home. We turned it on. It took about 3 weeks to collect all the numbers. And once I turned it on, my life changed. And it changed not only adding to my teaching, but it changed and just put me on a trajectory for pretty much outer space at the end of the day. So as a teacher, I was making probably about 45 to 47,000 a year.
Mhm.
That system, within the first 3 months, I was making that probably every 2 weeks.
Wow.
So, but this started, I turned it on at the end of May.
Mhm.
So school's normally over about June 15th. So by June 15th, I had to make a decision that I couldn't teach anymore. During passing period, I was talking to clients. During lunch, I was talking to clients. Before school, after school, I was talking to clients. Um, it exploded. So I talked to the Dr. Haugen at the time, who was the principal of Warren High, and told him, you know what? He always knew that I had a mortgage company, and I was doing real estate at the same time. I was like, you know what? I can't do both, and I have to choose, and I chose real estate. I had my clear credential and everything, but that was my time to exit stage left and do
Mhm.
what I do.
Nice. I'm pretty sure a lot of people would like that, like to have that
Yeah.
story.
It gets a little funny because I didn't know at the time that that type of advertising is not legal, because you
Ooh.
push the advertising costs onto the consumer. So after
Mhm.
about 8 months to a year of just killing it, I mean, I had faxes going everywhere. Um, all the hospitals, post office, all the government buildings. So everyone was calling me, and I was giving out free cruises. But that type of advertising is illegal. And I didn't know that at the time. So,
Right.
but I had sent out so many faxes, talked to so many clients. I was able to shut it down and stop doing things that were pushing the advertising costs onto the consumer, and basically start
Right.
working it from there.
Nice. And before a quick question, before we get deeper into the details, I know
Hmm.
earlier in the conversation you mentioned that in order to have a broker's license, you just need a
Hmm.
bachelor's degree or 5 years in the industry.
That is
So,
correct.
is there some sort of test or something like that that a person can take, or how does that process work? Let's say if a person goes to school, they graduate, they have a bachelor's,
Mhm.
how can they become a mortgage broker?
I would always, if you want to become a mortgage broker, I would first suggest you start out as a loan officer
Okay.
or a realtor or an assistant to someone like that.
Mhm.
Going from zero to broker is a huge step. That's like going from um, nurse's assistant to a brain surgeon.
Right.
It's a huge jump. It's a huge jump in knowledge. It's a huge jump in skills. It's a huge jump in law, just knowing what the laws are.
Right.
It's a huge jump in responsibility. But the steps are, if you want to become a broker, you either need to have, at the time, it may have changed, but at the time, you needed to have your real estate license for 5 years, meaning practicing real estate or loans.
Right.
You take about, don't quote me on this, it's about 6 to 8 classes. You can do it through a college. You can do it through Dwayne Gomar is a company that does it. Real estate trainers. There's a couple different outfits that prepare you. They're just classes. Most of them are online.
Right.
Um, you pass your classes, and then you do like a weekend crash course, and then you go take a state exam. Once you have your broker's license, you're able to legally broker loans. You don't have to work for a broker.
Okay. Nice. Thank you. Okay,
Hmm.
let's go ahead and get started.
Hmm.
Just so all the viewers know what your company does, would you mind briefly going over the services that Eagle Mortgage Companies offers?
Yes, sir. Eagles Mortgage Company is we're a brokerage, so I broker loans, meaning I'm an originator. We do loans from A to Z. I lend in 50 states when it comes to commercial, and about 32 states for your standard Fannie Mae, Freddie Mac, for your basic homeowner style loans. But when it comes to commercial and non-owner, I lend in 50 states. Um, I do have realtors that work for me as well. So we sell residential and commercial.
Nice.
I also, in part of the real estate industry, you have insurance, you have title, you have escrow. Um, you have home inspectors. There's a lot of different facets to the business in a normal transaction. So I have lending on lock. We have real estate, and then I also own an escrow company, an independent escrow, so we can service not only my company but other brokerages as well, whether it be loans or real estate.
Nice. And how long have you had the escrow company? Did you start that around the same time that you started your mortgage company, or did that come later?
No, the escrow company was opened in 2017.
Okay.
So I had been in the business. Wow, I've been a broker since '98. So that's what, 18, I've been in the business about 19, 20 years.
Mhm.
And then it was time to kind of just open up my opportunities just a little.
Right.
It's not easy, but because with my own business, I use my own escrow company, but we now have to market towards other businesses as well. So I have a staff down there that they handle that aspect of it.
Right. Thank you. So diving right into the details,
Hmm.
how does a mortgage company generate revenue for those who don't know?
That's an excellent question. I do refinance type loans, um, whether it be a rate and term refinance, which is just lowering your interest rate, shortening your term, or stretching your term. We do cash out refinances, which if someone wants cash out for debt consolidation, home improvement, reserves, they want to use those funds to buy other property. We do those types of loans. Um, and purchase money. Purchase money is whether you're trying to buy a residence for your home, for yourself, or if you want to buy it for income, whether it be units or commercial properties. Um, so we originate by most of my marketing is done to insurance companies,
Mhm.
um, more real estate brokers, other loan officers that have loans that they cannot get done, attorneys. They're really good divorce attorneys because their clients have to sell their home.
Right.
The marketing. I went to a Dan Pinto uh, seminar,
Yeah.
and his theory was referral based marketing.
Hmm.
So some brokers pay for leads. Some brokers um, get in with larger banks. I have more of a wider net, and it's really designed about referral based. Just making connections. Facebook is an awesome platform where there are hundreds, if not thousands, of realtors, insurance brokers, credit repair type people. Um, just talking to them and kind of letting them know what we do.
Nice. And a quick question:
Hmm.
um, does the mortgage business also have peaks and valley type of seasons like other industries? And the reason why I ask is I know we went through the transition with the Great Recession in 2008 or 2006, 7, 8,
Yeah.
or something like that. And how did you manage to get through that period, or did it impact you at all? And then at the same time, was there an influx of customers as we went through this current, or I guess as we're going through this refinance transition, when when the government was offering or aiding and offering the lower interest rates.
Hmm.
How was it going through those two particular time frames?
Okay, see, I love these questions. Um, I did tell you I came from a teaching background, right? So I
Right.
was a wholesome teacher of meager means. So I've been in the business since legitimately 94, legitimately. Um, and I've probably been through about two, maybe three peaks and valleys. We're about to hit another valley, so we're about to hit another. I'm not going to say crash, but rates have started going up substantially. When I first started in the business, the interest rates were in the nines, high eights, nines, sometimes tens.
Mhm.
I've also been in the business when interest rates were in the low twos. So, in order to get from nine to two, lots of things need to happen.
Mhm.
So, I in 2003 is when I really became successful in this industry. When I say successful, I'm saying we were doing personally between me, my processor, and maybe one or two loan officers, we're doing about 100 loans a month. That is a hell of a lot of loans, a hell of a lot of money.
Right.
And I was doing that solo. Loan packages at that time were only about 10 to maybe 15 pages. Now loan packages are easily maybe 100 to 200 pages, depending on what type of loan you're doing. So the industry has seen a lot of turmoil, has seen a lot of changes for the good and some for the bad, but most of the time it's reactionary. So the interest rates went all the way down from 9% to 2%. So the boom occurred in the mid to late 2003 and went till about 2007.
Mhm.
At that time, that was the feast. We were feasting.
Mhm.
We had negam loans. If everyone had their real estate license, I swear my gardener had his real estate license. Everyone was in the business because it was amazing. It was an amazing time, but it was also a time when there were no bumpers put on the industry.
Right.
So we had loans where they were called Nina loans, no income, no asset. All you had to do, zero down. All you had to do was just put your name, your social security number on an application, and you can buy a property. Sometimes two, three, five properties at once.
Wow.
Some people were buying three to four properties at once, um, and that's what led to the crash. And there were a lot of it was chaos in a good way and a bad way on everyone. Meaning, buyers wanted to buy, brokers wanted to do their financing and sell them property, and lenders needed to get money out of their books. They needed to lend. So that recipe was a recipe for the crash. The government had all types of programs, and they still do. But at that time, it was it was the good times. The good times were rolling. You had asked, how did I get through it? When the market crashed, I wasn't that type of broker where I had a 10, 15, 20, $40,000 office. I'm sorry, square foot office
Mhm.
with two, three, 400 employees. I always kept a lean and mean quality team. So when the market crashed, I didn't have Bentleys and Maseratis and exotic boats and cars and houses that I need to maintain. I always kept a pretty humble existence.
Yeah.
So I was able to ride it out with my savings and just doing good business.
Yeah.
It weeded out all the people that were here for the wrong reasons.
Right.
Since I came from a teaching background, I've always been a teacher. So when I'm talking to clients, I'm always speaking in a way where I make sure that they understand. And if they have questions, I answer everything. So I was able to withstand that crash and stay in business, keep everyone employed. And when the market came back, we had cleaned the industry out of all bad actors,
Hmm.
of brokers, lenders, real estate agents, and I was one of the ones left remaining. Um, At this time, there are not a lot of real estate brokers or loan brokers like myself.
Yeah.
A lot of people are direct lenders, um, and they all started coming back, but we're about to hit another downturn, and it's going to weed them out again.
When do you think we'll hit the downturn?
I can't. If I could answer that question, I would be in Vegas betting on black.
You're right.
There's I can't tell you the minute, the hour, the day.
Mhm.
What's happening is the interest rates are starting to go up. Prices have been inflated.
Mhm.
So a person that could buy a $500,000 home 3, 4, 6 months ago
Mhm.
can't really afford that home anymore.
Right.
They might be able to only afford a $400,000 home or a 420. So that person that was selling that home at 500, the buyer that wanted the 500 was a buyer that was really wanting to buy the 500, but he can only afford 400.
Right.
Well, the buyer that was buying for 600 and wanted the homes in the 600 range can only afford the 500. So he's not really liking that $500 home right now because he was liking the six,
Right.
but it doesn't exist anymore. So what's going to happen is many homeowners that have equity will be forced, if they really want to sell,
Mhm.
to lower their price.
Right.
Okay, so that's kind of where we get the correction. It's necessary,
Mhm.
and it's already in effect.
Right.
Within the last 3 months, people were betting 10s, 20s, 30, 40, 60. I sold a home in Downey where a physician paid 62,000 above my list price.
Wow.
62,000, and there are people paying even more than that.
Yeah.
So that we're seeing that come down, but there's not a lot of inventory. So we're waiting for the rates are going up, not
Mhm.
a lot of inventory. So the market's not really slowing down yet, but the moratorium on foreclosures has been lifted. So
Mhm.
all the people that were in forbearance, they now have to start making their mortgage payments again. And
Mhm.
many of them are going to have to pay chunks of money to reinstate their loans. So they're
Right.
probably not going to be able to come up with the amount of cash that's needed to do that. So they will either sell, um, continue not making their payments, and then the bank will be taking those homes back. So we will see a pivot in the market. Some people are projecting 4 months, 6 months, a year. It takes some time for a bank to really take a property back. And
Mhm.
if that property has equity, they will keep using some of the equity to pay for the shortages until it runs out, and then we want to having a short sell the property. So there's a whole method to the madness.
Right.
Um, so that's what we anticipate.
So for those people who are looking to buy a home who just couldn't afford it at this particular time because of the prices of homes were sky high and they were getting outbidded and stuff like that, it would be best for them to just pretty much kind of wait, kind of ride out a little while longer, and maybe something will come along that they can, there's more a price will come along that's more reasonable for them.
This is my advice for that person. It's never a bad time to buy real estate. And what I like to give people examples. I'm talking to a person that's living in a 2 to 3 bedroom apartment. They're renting that apartment or condo. I have a townhome in Moreno Valley. No, I'm sorry, it's 2 bedrooms, 2 baths, 1 car garage. Um, and this is in Moreno Valley. The rent on that property is 1750, and I have a family paying 1750. The mortgage on that property, I paid 220 for it 2 summers ago. The mortgage on that property is 1,200 bucks.
Oh,
So how
yeah.
can I tell someone you're better off waiting until the property drops? No, you need to buy a property because right now it's a mindset. That renter is paying 1750 a month. All I have
Hmm.
to do is run his credit. If his credit is not good enough, I can counsel him and let him know what he needs to do to get his credit up. And then he can buy the same condo. It's going to be a little bit more. His payment might be 1,400. It's still lower than his 1750.
Hmm.
You see what I'm saying? So if you
What you
have
saying?
someone living in LA, I mean, a lot of times I have to counsel buyers and say, you may have champagne taste and beer bottle money.
Hmm.
You may want a 3 to 4 bedroom, but you're currently living in a 1 to 2 bedroom apartment. Why not buy a condo or a townhouse? 1 or 2 bedroom condo or townhouse. You see what I'm saying? Oh, but I need space. You're not living in space right now. Let's
Hmm.
buy.
Right.
If you're living in LA, you may have to commute to Pomona. You may have to commute to Ontario. You may have to transfer. I mean, you have to kind of look what's worth it for you. Do you want to pay my child's uh, inheritance, or do you want to
Hmm.
pay for your child's inheritance?
Right.
Again, it's mindset. A lot of people are comfortable renting when they're just burning their money. An exercise I like to give my potential buyers is, how much are you paying in rent right now, sir? Well, I pay $1,400. How long have you been living in that a house or apartment or condo? I've been here 5 years.
Mhm.
So multiply 1,400 times 12 times 5. That's how much money you just walked out to the front lawn, poured some gasoline on it, and burned it.
Yeah.
If you really think about those numbers, it's almost gross.
Mhm.
Okay, now if you're trying to live above your means and look like your Big Willie style,
Mhm.
yeah, you might be able to rent a mansion for 4 or 5 thousand, where your mortgage on that mansion might be 5 or 6 thousand. But
Right.
who are you living? Who are you living for? Just to make it seem like you own that mansion and you're renting it?
Hmm.
So there are schools of thought on both sides. There are people that say never own the home you live in, and they have good reasons for that,
Hmm.
because there are only certain parts of the home you live in that you can write off.
Right.
They say, well, buy an income property. They're right. You can write off pretty much 100% of all your income property expenses. But if you're still renting the house you're living in, you're still paying someone else's mortgage for them at the end of the day.
Right. So, given the circumstances that a lot of people are in today, in terms of like student loan debt and stuff like that,
Hmm.
how much would you say a person has to make in order to afford to live in LA County, right, where the homes are, I don't know, $500,000, $600,000, maybe $700,000 for decent neighborhoods and stuff like that. In
Hmm.
order to and I know it varies based on credit as well, but in
Hmm.
general, how much would a person need to make? To pay for a $500,000 home or $600,000 home, and
Hmm.
how much does student loans play a part in being able to qualify for that?
That's an excellent question. Student loans, many times they're deferred.
Okay.
So even though they may look deferred on your credit, we count that potential payment against you. We use 1% of the balance. So if you owe $30,000, 1% of 30,000 is, I think, 300.
Right.
So we count $300 against your debt. So even though it's deferred, we're still going to count it like a car payment. If you're trying to buy a home for, let's say, 580, and you're putting 10% down, that's 58,000 for the down payment. There's still some closing costs associated with that.
Mhm.
So you'll need the 58,000 for the down, and the closing costs are going to be anywhere between 7 to 10 grand, give or take. The payment on that is going to be realistically, I want to say about 3,200 bucks,
Okay.
give or take.
Mhm.
So I need, and that's all in. That's principal, interest, taxes, and insurance.
Right.
So it's going to be about 3,200, give or take. So we need your debt ratio at 50%. So let me give you two quick calculations. Assuming you have no debt, meaning no school loans, no car payments, nothing. If your mortgage payment is 3,200, then you need to make 6,400 per month.
Okay.
You see what I'm saying?
Right.
So if your mortgage is 3,200 and you have a $700 um, car payment, then that's what, 3,900. So
Hmm.
now you need to make close to 8 grand to qualify for that $580,000 property.
Okay.
So we're looking at your gross income divided by your debt. I'm sorry, your debt divided by your gross income to be 50% or less.
You
So
know what?
you need to make. Go ahead. I'm sorry.
No, no, no. I was going to say, I thought you were going to say the other way around, and I thought it would be a lot easier for everyone else in the sense of, let's say, for example, the mortgage payment is 3,200, and you would need the gross income to be 64, right? So let's say if they have a $700 bill or a $700, payment or something, some sort. I thought
Mhm.
you were going to say that they would only need to make 7,100, right?
Mhm.
Because we're just adding
No,
the 700 to the
no,
64.
because the way it works is this is just one plus one. This is arithmetic. So at the
Mhm.
end of the day, if you have a mortgage payment of 3,200, and let's not use a car. Let's just say all your revolving debt, whether it be car loans, school loans, everything adds up to 700. Every single month, you're going to have to write a check for 3,200, and
Yeah.
then all your debt for 700. So that's $3,900 in debt.
Mhm.
So your gross income needs to be able to cover that. Now, although you may make 8 grand or 7,800 or whatever double of 3,900 is, what is that? 7,800.
Yeah.
Um, although you may make gross 700, your real bring home is not 7,800. Your real bring home is probably 58 to 6 grand.
Mhm.
So you're only left with about 2 grand for all your other stuff: food, travel, clothing, utilities, cell phone, that type of stuff. You know what I mean? So that's another thing I explain to new homeowners. Yeah, you may make 100,000 a year, but your bring home's probably 75,
Maybe.
70.
Yeah.
You know what I mean? So although I may qualify you for way more than you really can afford, I like to explain you still want to leave some room. So for that person living in LA County, most people living in LA County have really good salaries. You know
Right.
what I mean? Or
Yeah.
they're dinks, dual income, no kids. You see
Yeah.
what I'm saying? Or you may have one child, but you always have those two incomes. So that's rarely a problem. The biggest hurdle for me is getting people to change their mindset, get out of their comfort zone of just paying someone else's mortgage for them. They're really
Mhm.
just comfortable paying rent. And
Right.
sometimes it's what you want to do.
Right.
It's a mindset. Like I've this tenant has lived in my townhouse, really nice family, for 2 years.
Mhm. Now let me
Am
ask
I
you
gonna?
this. Not everyone has 50, $60,000 laying around for a down payment.
You're
So,
100% right.
how can a person get around having to put down 50, 60,000? Is there a way to obtain down payment assistance, right?
Mhm,
And then at
mhm,
the same time, it seems like what you may have described for the 3,200 example may be a 30-year loan. Are
mhm.
there any 40-year loans, 45-year loans? Can a person extend it out a little bit further in order to be able to bring that payment down some to achieve ownership?
That one example I gave you was for a standard conventional 10% down.
Okay.
FHA requires only 3.5% down. Conventional, realistically, you can either go 3% down or 5% down. If you're a veteran or in the military, you could go zero down under VA.
Okay.
If a home is in certain areas, agricultural type areas out there in the Lancaster, certain geographical locations out there, they have USDA loans. USDA is not just for beef; they also insure loans or guarantee loans. That's also a zero down product. We have Cal HFA, which is another zero down product. The
Hmm.
problem with zero down is a seller has their own preconceived notions of buyers.
Hmm.
So if a seller has their home on the market for 580 and there's a buyer that's going conventional, 5, 10, 20% down, and then they get another buyer who wants to go zero down, the buyer that has more resources and more reserves many times is a little bit more um, dependable.
Hmm.
Because let's say the property doesn't appraise for 580. Let's say it comes in at 570. That conventional client, if he really wants the property, may want to pay the 10,000 difference and still give the seller their 580.
Right.
Whereas the other type of borrower, the FHA zero down, or I'm sorry, FHA 3.5, or VA or USDA, they don't have any reserves to compete. In today's climate, when there's a lot of inventory, we have zero down loans all day long for clients. So I don't want them worrying about a down, but we're not in a period of time where your down payment offer is going to be considered. Most sellers are going to overlook you for a little bit more a stronger client.
Right.
And I represent zero down clients all the time. It's just very difficult to get their offers accepted. I'm
Mhm.
lying, cheating, stealing, and threatening lives just to get them to look at my offer. So it's something I have to counsel. I have to prepare my buyer and set
Mhm.
proper expectations. So they're not thinking they found their dream home and they really think they're going to get it, but they're competing with cash offers, 20% down, 30% down, 10,000 over and above what they're asking. We can't
Right.
compete. So
Right.
I have plenty of buyers sitting on the sidelines waiting for the market to change, but I'm still looking. My team
Yeah.
is still looking for them. We're looking for those opportunities because some properties that need work, many people may overlook them. But my zero down fella might be a contractor of some sort or have family that's in the business. So those transactions still occur, but they're far few in between.
Do you have to have better credit, in order to get the zero down, or is it pretty much the same?
No,
You know.
no, FHA. See, we have different. You have FHA, which is a government insured loan,
Mhm.
um, and you have conventional. FHA is a lot more aggressive in their offerings, meaning you can have a higher debt ratio. FHA loans go to 56.9, meaning you can have more debt to income, where conventional wants you at 50.
Okay.
So FHA's rates are also better than conventional. Conventional rates are in the 5.25 range. FHA rates are in the 4.75 or less range. FHA's mortgage insurance, meaning the insurance for putting down a low down payment, is a little bit higher than conventional, but FHA's overall payment many times is better than conventional.
Mhm.
So when I qualify a borrower, I look at all options. I
Okay.
qualify them for FHA, I qualify them for conventional, and I ask them, are you in the military? We can also look at a VA option.
Okay. And are there any loan terms that extend past 30 years?
Yes.
The person signed
Mhm.
up for 40 years, and
Yes,
how
sir.
often does that occur?
We do have 40-year loans, but a lot of banks stick with the 30 or less, but there are some banks that do 40-year amortizations.
Okay. Okay.
And that does lower your payment also. We also have interest only loans where you're not paying down your principal, you're only paying your interest, and that helps people qualify as well because they still own and they're not renting, but their payment can be three, four, sometimes $600 lower because they're only paying interest versus principal and interest. But it's still better than renting
Right.
because when you do your taxes at the end of the year, you write off the interest you pay on your loan.
Exactly. Right. So it's like you get it back. So it's like the money that you
You get it
paid
back
on rent,
anyway.
you get it
You
back
get it back
anyway.
anyway. You get
That's
it
pretty
back anyway,
good.
but you don't get that rent payment back unless you're self-employed of some type, and then you're
Right.
using your rental as your office or a portion of the rental as your office.
Okay. Thanks for that. That's the jewel right there.
Oh
Um,
yeah, there's a lot of tricks to the trade, man, and that's why it's important. You don't have to use me, but you need to use somebody like me that knows all the tricks to the trade because there's a lot of little nooks and crannies that a lot of the larger banks, B of A, Wells Fargo, Chase, their officers and loan officers aren't really trained to find the little nooks and crannies. They only offer their own product. Where a broker, we can offer hundreds of banks different products. And that's the benefit of using a broker over a direct lender many times.
nice. So this next question is for individuals like myself who's looking to branch away from the wholesaling side of things and get into actually, you know, purchasing the properties for cash and flipping it and stuff like that, and
hmm
and naturally leveraging hard money, right?
hmm
So how does
hmm
that process work? How can a person acquire hard money in order to purchase property and flip it and renovate it? And in addition, how can, let's say for example, is there circumstances where a person doesn't have to come up with 10 or 20% down, or is there down payment assistance for acquiring hard money as well?
Okay, let's start. I'm going to answer the last portion of your question and then I'll work my way back. If you're an investor means you invest. What are you investing? Cash.
Right.
When it comes to can a brother get a low down payment hard money loan, many times the answer is hell no. If you're investing, the property that you're buying is an investment. It's not something that you're going to live in. The home you live in, you'll die on that front step before you let somebody take your property. Whereas an investment, if you run into hard times, you leave them keys on the front step and you tell the lender come pick up his keys.
Right.
So normally when you're in the fix and flip game,
Mhm.
the only way you're going to get a low down option is if you find a property that is worth a lot of money and needs work, and the seller is willing to sell you the property for very cheap.
Mhm.
Let's say that, and I want to use an even number. Let's say you have a property that's being sold. It's half of the property's burned down, or the windows are broken, it's been vandalized, and it's worth 500, but the seller is willing to sell you that property for $100,000. And we know that it needs $50,000 worth of work.
Mhm.
If you bring a deal like that, which are far few in between, if you bring a deal like that to me, I have lenders that will lend up to a certain percentage of acquisition and repair value. So if you buy it for 100 and it needs $50,000 worth of work, but it's worth 400, 500, 600,000, they might give you the full 150 and then possibly split the proceeds when you go to sell it,
Got it.
or sign some sort of agreement that, okay, we'll give you the 150 you need, but we want a certain percentage back on our loan. We want 10% interest rate. We want to charge you a bunch of points on the loan, but we'll put up most. So there are some private investors that do things like that, but trying to find a deal that's so sweet, those are tough.
Right.
Most of the time, you need about 15% down to buy property. Most of the time. It used to be 20 to 25, but I have lenders that when you want to try to buy an investment property, we only require 15%, which is not a lot of money in the big
Right.
scheme of things if you're an investor.
And what about the part that the renovation costs? You right. So let's say, for example,
Okay.
the property is 100, they need to come up with 15. Whereas if they use the 15 to acquire the property, where is the money coming from in order to renovate
See,
it?
the lender will lend you the 150 and then you only come up with 15,
Okay.
or 15% of acquisition plus construction. You see what I'm saying? So
Yeah.
some lenders they'll it all depends. When a lender or when a hard money lender is lending their own money, they'll do whatever they want. I just have to get them on the line, tell them what the scenario is, and then they price it out. But if you don't, it's rare that you can be a fix and flipper with no money of your own. You
Right.
have to have some capital. Not a hell of a lot, not as much as you used to have, used to have to have,
Right.
but you do need some capital of your own. You have to have some skin in the game, as we call it. You gotta have something to lose as well.
Hmm.
But there are some little hustlers out there that are finding deals and making it happen. It's just not normal. It's rare. So I don't want to even give that as an option. Just know you got to have 15% of your own money, no matter what you do. Sometimes you need 25%, but if you can at least come up with 15, we could work with that.
And what about the points? Can I know typical range right now is maybe around 8 points or so. Um,
Nah, nah,
you
it's not
need
that. It's not that aggressive. You must be dealing with those guys that want to break your fingers when they lend you money. No,
okay.
most of the time you're going to pay 2 to 3
Okay.
on each side. Like the hard money lender might charge you 3, and then the broker you're using might charge you 3, or the hard money lender might just charge you 3 if you know him directly. Many fix and flippers have their own direct hard money lender that just charges them, and it's normally 3
So
most of the time.
when you say 2 or 3, are you talking about on a return? Because I was talking about on
No,
terms of
no,
the interest
no,
payment, the monthly interest
no.
payment.
Oh no, the actual monthly interest payment, or the actual interest rate for hard
Right.
money loans are anywhere between 6 to 12%.
Yeah.
I priced out a hard money loan today for a woman. She owns a property free and clear. She just needs 100 grand out. She's not even giving us any documentation. We're not even doing an appraisal because the property's worth 1.2 million and she only wants 100,000. So her rate, credit, not even looking at her credit, is 7.99, and that's charging 5 points, 2.5 to my investor and 2.5 to me.
Okay.
You see what I'm saying? So it's not ab- absorbent interest rates, but the rate is higher than prime, or it's higher than your norm.
Hmm. And how long does it take to go through this typical process, right? Because sometimes you work with wholesalers. They only have the property on the contract for pretty much a short period of time, maybe anywhere from 10 to 14 days. And I know that sometimes they can get extensions when they're working with the homeowners and stuff like that. But when you have situations where you're working with a wholesaler and there's a short time frame, how long does it take to get qualified for a hard money loan and be
Mhm.
able to purchase the property?
I got called from a hard money lender today when I was having lunch. He could have money for me in 4 days, as long as I get him what he needs. So
Mhm.
you can get loan as short as 4 days. That the woman that needs that 100 grand out on one of her investment properties, that's going to take about a week and a half to 2 weeks because we're really not doing much on it. It You can get hard money loans done pretty quickly. Every loan, I always tell people, every loan is like a fingerprint. They're all different. It all depends on your current scenario and your current situation.
And what,
Most escrows, I'm sorry, go ahead.
I was gonna say, what typically do you need in order to? Do you need to go have an appraisal? Um, do you typically need to run credit, or is it, or can it be based on the? I know you said in this particular case for this woman that you described, it was based on the deal. So
Yeah,
it can.
yeah, that was a
You
refi. That
okay?
was a cash out refi for her. We're not even, I mean, I'm going to run her credit and show it to the investor, but we don't really care too much about it. Um, we run comparables. Comparables are just homes that are selling in the area. And we still have to open escrow. We still open title. We have to check title to make sure there are no liens, judgments, any encumbrances or anything like that. Um, so we go through a series of checks and balances to make sure everything's legit with it, but that can actually go pretty fast. Your average loan takes 30 days or less, but when it comes to these hard money deals, they can happen in a couple of days to a week or so. They normally happen faster because you're not going through the normal legalese and the normal process.
Okay. You know what, David? I feel like we just scraped the surface on all of this.
I told you. I told you.
All right, we may have to, have you come back and be a guest again and go into a little bit more
Definitely.
detail. Um,
Definitely.
but if you can leave us with two key pieces of advice, one for someone who's looking to become a homeowner, what would you
Mhm.
tell them? And then also for someone who's looking to do some investing on the investor side, what's
Mhm.
a key piece of advice that you would share with them as well?
That's an excellent request. Um, if you have a job and you're looking to make your money work for you, one of the best things you can do is invest in real estate, whether it's for your personal consumption or your personal use or an investment. Real estate many times will appreciate faster than your bank is going to give you the interest on your savings account. Or
Right.
if you look at your stocks and bonds in your 401k, that property is appreciating faster than the money that's in your 401k appreciates. Um, just like real estate values go up, they also dip some, but they always go up.
Right.
My mother-in-law, she's transitioned. She bought her house back in the 70s, the early 70s. She paid $35,000. That home is still in the family. That property is in Huntington Park. Is worth about 650 to 700 right now, and she only paid $35,000. So
Hmm.
no matter what has happened in the world, all the wars we've won, the wars we've lost, that real estate kept going up because no matter what, there are more people coming in the world. There are more people that need housing. It's a commodity. So the advice I would tell to a person that's buying their first home is buy it. The first property that I purchased was $330,000. It was a duplex in Downey. When I was signing my loan documents, it was the first property I ever bought. That 330 might as well tell me it was $1 million. Now I would kill everybody to get that 330. I would love to have that property. That property is worth about 1.5 right now.
Hmm.
And we bought that property back in 98. Now worth 1.5.
Wow.
It's crazy.
Yeah.
So for the person that doesn't own anything and they're paying me rent, I would suggest you go buy my condo. You're going to
Mhm.
pay more than I paid, but you're still going to pay less than you're paying in rent.
Right.
For the investor, a lot of times investors, well, I want to wait for the properties to go down. They never go down. And when they do, there's so many people going after them low properties. Welcome. I mean, good luck. There's
Mhm.
competition out there.
Right.
So people are using real estate as an avenue for gaining wealth. And when we say wealth, it's wealth that you can pass down to your kids. You can sell that property, take all your money out. Many times, depending on the situation, you will pay capital gains, but sometimes you can do what's called a 1031 exchange and roll the proceeds into another property just like it and not pay any taxes on it if it's an investment.
Right.
If you live in a property and you sell it, talk to your tax guy, but many times you don't even pay capital gains on properties you live in and sell because it's a property you've lived in within the last 5 years. So, my advice is always buy real estate. Biggest mistake I ever made, and I've been in the business since 1994, was thinking that I would always be making 50, 60, 100, sometimes 280 to 300,000 a month doing loans. Those days are over. I wish I could make that kind of money. But if I would have bought more real estate, that is my biggest regret, is being in the business and not buying real estate. So now I'm playing catch up. I got
Mhm.
160 acres in Arizona that I'm trying to develop. I'm playing catch up. I'm paying a little bit more for my real estate now, but I'm spending more time trying to buy a rental property than buying the nice cars or taking the nice trips. It's thinking about my kids now, and that's the advice I would give to someone that was thinking about it.
I'm sorry. A couple more quick questions based on something you
No
said.
problem.
Um,
Hmm.
what's a good area? I know you said you purchased some property in Arizona.
Hmm.
What's some good areas in your opinion that people that seeking to invest should be looking in right
Hmm.
now?
That's an excellent question. If you're trying to buy in the big cities, you're going to pay a premium because everyone's in the big cities. So, but there are people that live in Rialto,
Mhm.
Hesperia, Victorville, Appleville, and I'm talking about Southern California. This podcast may go all around the world.
Right.
So you don't focus on the large cities, you focus on the outskirts because people will live in the outskirts and commute to the larger cities. So for SoCal, we're looking at everywhere outside of LA, San Diego. So stay away from those large cities. You're going to pay a lot. But if you go to Lancaster, Palmdale, Rialto, San Bernardino, you start heading away from the big city, the homes are a lot more affordable. For the investors, I'm looking at Georgia, Mississippi,
Mhm.
those states where most people have left. Pennsylvania. I was looking at a 4 unit property in Pennsylvania for 240, and you can get Section 8. So I'm looking at Pennsylvania. I
There
cheat a little bit because I'm a pilot, so I can fly to all these different places in my plane and everything. But I'm looking to get into those states where everything's a lot more affordable. And that's what I would advise you do as an investor, because now with the internet, I can talk to a tenant just like this. I don't need to really see him. I'll
Mhm.
run his credit. I have maybe a manager that lives back there. He has the key. He can show it to the tenant. I run their credit. They give me the deposit. I never need to see them, and they can be renting my property from me. So my advice to people is don't stick with New York City, LA, San Francisco. Texas is hot.
Mhm.
There's a lot of nice places in Texas. I like Arizona because their politics is a little bit different than California. Prices is the prices are starting to go up in Arizona as well. They're high, but the property that I purchased is in a place called Williams. It's between the Grand Canyon and Flagstaff. So I'm looking to develop that and put some homes on it. But that's my advice. Don't
Okay.
focus on Los Angeles if you're in SoCal. It's just crazy.
Okay. All right. Thank you, David. I
Yes,
mean,
sir.
I can go honestly go on and on. I'm sure,
Hey, hey,
but
we got to do this again. And then you'll
absolutely.
have more questions. We'll be able to focus
Mhm.
on something specific. This was just our quick little introduction, little snapshot into a little bit about what I do. But I'm a wealth of information. I've been in this business over 20 years, so there's not much I haven't seen, but I'm still learning too. Every time we have one of these downturns or the market changes, I have to pivot and look at stuff a little bit differently. But at the end of the day, my main priority is to have integrity, think long term, and try to help people. Um, so it's not about the money. It's for me. It's I used to teach chemistry, so I could see the light going in people's eyes when they were understanding how to make salt or how to make ice cream. Same with real estate. Once I show you the ropes and explain it to you, you call me forever. I have a little saying. I don't want this loan from you. I want every loan you do for the rest of your life. I want every
Hmm.
loan your family does for the rest of their life. So I normally want to be that call when it has to do with real estate.
Okay. Okay. So, just to, in case we have any viewers or listeners who want to contact you, how can they reach out to you?
David Jennings, Eagles Mortgage Company. I'm the president, and Vision Escrow Group. Best way to contact me is via cell phone 310-702-8750. I am available for your services 24/7. Best way to reach me via email is David Jennings, DavidJennings at Eagles like the bird, Eagles, M is in Mary, T is in Tom, G is in golf, I is in India, N is in Nancy, C is in Charlie.com. So that's David Jennings at eaglesmortgageinc.com. My website is eaglesmortgageinc.com or visionescrowgroup.com.
For more info about what we do, please visit dbinvestmentsco.com. We can be contacted at info@dbinvestmentsco.com. Once again, that's info@dbinvestmentsco.com. Thank you for tuning in to this edition of The Business Behind the Success. Our goal is to have informative conversations and share personal perspective with individuals who are successful in their field of expertise in hopes that it will lead to more favorable outcomes for anyone seeking guidance. If you support the content, please hit subscribe.